So this video is going to be based on how you can use supply zones or supply imbalances to nail the market tops, to nail possible areas where the market has a high probability of turning to the downside in respect to supply zones. This is just going to be based off supply zones because I took 3 solid high quality trades today based off of supply imbalances. So it's important for you guys to understand the concept of imbalances and balanced markets. I have a video that I posted a couple weeks ago. I will link it in the description below. So I recommend you guys go view that first if this is the first time you guys are in my channel. So if you guys do learn anything from this video and anything that I'm going to explain, please drop a like, please subscribe for future videos, and let's get into it. So I've been getting a lot of questions about how supply and demand is different than support and resistance. So really fast, support and resistance is an exact level on a chart. It's a pivot point where the stock could not have breached to the upside or where the stock could not have breached to the downside. What's important is that a support and a resistance level is an exact price on a chart where the stock could not have breached through the ceiling or breached through the floor. It is an exact price versus a supply or demand zone, which is a zone or an area where the market had a supply or demand imbalance, which caused from supply exceeding demand or demand exceeding supply. Economics 101, right? So this was a 1 hour supply zone. It is a zone, it is an area on a chart where it provides us a low risk, high reward, and a high probability area of where the market will possibly turn to the downside or to the upside if you're talking about demand. But this is supply, and this is a 1 hour supply zone which formed yesterday. And why we make this a supply imbalance and how do I know it is a supply imbalance is that this move to the downside, it is a 30-point move to the downside. It is an aggressive, vicious move which caused from a supply imbalance, because that is what moves prices. No retail trader is going to move the S&P 500 future 30 points to the downside. What causes this is huge institutional selling activity, which outweighed the demand of the people buying, or the retail traders buying this to the upside. So all of a sudden we hit a roadblock, huge sell-off. So this is telling me there are unfilled orders sitting at this level from institutions waiting to be filled when price re-enters this zone, which gives us low risk, high probability, high reward areas where the market's going to turn. So fast forward, we wait for price to re-enter the zone. And as you guys can see here, retested the zone the first time, rejected, gave us a nice move to the downside. Retested the zone the second time, rejected, gave us a nice move to the downside. And then boom, the whole day, rejected this zone. Only was up here at the supply zone in pre-market, and then boom, rejected it 60 points down from this 1 hour supply zone. So it's very, very powerful, especially on a higher time frame. I'm going to show you the origin of this zone. So this right here was the origin of this 1 hour supply zone. Fast forward it, rejected it once, twice, moved to the downside. That was our first trade of the day. Yielded 60 points if you respected your rules. And the rules were to short at supply after a rejection and put your stop loss at above the supply zone. So this was a 5 points risk to make 60 points to the downside. So 5-point risk, low risk, high reward, high probability area of turning, because it is a supply imbalance where there is institutional activity at that level. So the second trade we took today was also on the S&P 500. Now this is in relation to SPY, ES if you're a futures trader, SPY if you're an options trader, same thing. These are going to follow each other. They're directly correlated. SPY is just the options to the S&P 500. So the second trade was also off of a supply zone, which was a 3-hour supply zone, which formed at the 7 o'clock candle Eastern time this morning. So let me show you guys that origin zone. The origin zone was from this 3-hour supply zone. So what happens is I wait for price to retest the zone. And what validated the zone was this drop at 10 a.m. Eastern, validated this was a valid supply zone. So what I do is I wait for now the stock to relief bounce or rally into supply, and it will give us an area to get short, and it is an area where the market has a high probability of possibly turning. So I put this in the Discord. This is what I was watching at 9:59. Massive move down. I said, don't try to catch a falling knife in long at demand. Use it as a take profit area for short positions. So this at 10:07, supply was forming inside larger time frame supply, which usually will lead to a trend change. So we had supply, inside supply, gives us double confirmation. Here is the 3-hour chart. I said it would relief bounced right into the origin of the sell this morning. We'll look for a short position in this area. I like the risk to reward here if we start showing signs of weakness. So as you guys can see, we rallied, relief bounced into this 3-hour supply zone. If you go onto a smaller time frame, you guys will also be able to see the rejection pretty clear. Relief bounced, looked like we were going to break the highs, looked like we were V bouncing, bottomed out here, which was not the case. It was just a relief bounce. Everyone was buying into a supply imbalance where institutional sell orders are sitting at. Took this short here. Let me pull up my SPY trade. Wasn't a huge trade at all. I took profits fast. But I got in at 11:01 and got out at 11:17. 11:01, not the best entry and not the best exit, but rejected supply perfectly. So this was a fantastic trade based off of a supply imbalance again. So now the second trade, and which was pretty much my biggest winner on the day, was Microsoft. Pull up Microsoft here, out of weekly supply. Now I also put this into the Discord room at 9:39 a.m. As it was happening, I had a weekly supply zone, as you guys can see the origin right there, at 183.58 weekly supply. So what this stock did was, if I go to a 1-minute chart to just illustrate this, the stock looked strong out of the gate. So everybody was buying, thinking the stock was going to skyrocket. But if you don't know the strategy and you don't know supply and demand imbalances, you would have got screwed up, in this area right here, which was weekly supply at 183.58. So I took this short in this area, which was weekly supply, 30 contracts, and I kept scaling out, kept taking my profits, because what I do is if the stock moves down against me or with me fast, I'll take half my profits or a quarter of my profits, and then I'll just let the remainder ride, so I never can let the trade go red against me if I take some of my profits fast. It's just a risk management strategy that I use. But here's my Microsoft trade. As you guys can see, I got in here and then sold 10, sold 10, sold 10, scaled out, protected myself if the stock did want to reverse. But it was a perfect move up right into weekly supply. Perfect entry, perfect rejection. I posted this into the chat room. Perfect rejection from weekly supply. So this was a fantastic trade. It was my biggest trade today. And as you guys can see, we bounced with SPY into this sort of double topped. Gave us a good entry to get short again for a quick move to the downside. But the more times a stock enters a supply or demand zone, the less of the unfilled orders will be sitting there. So the higher probability it will be to break to the upside, because there are less unfilled orders there and there's a weaker wall basically sitting at that level. And as you guys can see, we rallied out of the zone, but it gave us no short signal after our first one because it's a weaker level after being tested multiple times. So the final trade now was on Facebook. Same thing. We had weekly supply. So let me pull up Discord like always. This I posted in pre-market. I've been watching this for the past 3 days was the Facebook plan. I posted this at 9:09 a.m., 20 minutes before the market opened. The plan was to short at weekly supply at 211.45. Perfect weekly. It's a clean, fresh, unused level at 211.45. So the stock, rallied. It's kind of choppy uptrend today to the upside. And look what happens as soon as we hit weekly supply. Rejected this level perfectly, gave us a good short signal to the downside. I mean, pretty much perfectly at the start of the zone. You cannot get better than that. This was my entries and my exits. I shorted at supply and took profits all the way to the downside. It's a textbook example. We rallied and then we tagged it. Institutional orders get filled right at the start of the zone, and boom, we moved down 3 points to the downside. So this was also a good end of the day type of trade, kind of like a wallet patter. Wasn't a home run. I've just been stalking this for a while, so it's going to be interesting to see. It's a weekly zone, so it's going to be interesting to see if this zone is going to hold up and it's going to reject within the next 2-3 weeks. I expect price to come maybe back into the zone, test it a little higher, test a little larger time frame supply zones. But as a day trading perspective, this gave us a nice 3-point move to the downside at the end of the day. So overall, it was a great day, just trading 4 different supply zones, all different origin, all different zones that form different time frames. It's a very strong strategy. Like I said, low risk, high reward, high probability areas of where the market's going to turn. So if you've enjoyed this video, drop a like, comment, and if you learned anything from this, all I can ask is you just to subscribe to my channel. Appreciate it, and watch the next video.